Back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good levels. Now remember, this is not financial advice. I'm not a financial advisor. You're responsible for your own trades. Always do your own research and trade at your own risk. All right, guys, let's hop into the chart. And it's currently about 5:20 p.m. Eastern Time. It's June 1st. Today we have a weekly candle close in about less than 3 hours. So at 8 p.m. Eastern Time is very important to see where this weekly candle closed. Today we're going to start off with the monthly chart. We just had the monthly candle close yesterday for the month of May. And there's a couple bullish things here that I want to talk about. First of all, I want to talk about how April we closed green, and now in May we also closed green after having 2 red months. Especially this one was horrible, this red engulfing candle here back in like February. What I don't like is that we did wick off from the high here of like almost 112, but we did end up closing at 104,591, and I believe that is the highest monthly candle so far that actually closed. Now what I'm not liking is we are far away from the 21-day moving average, but it moved up. Now it's at 71,477. Still scary, but I remember a month or two ago it was like at 63,000, so we're almost up 10,000, so that's pretty good. Now another thing that's very bullish to me is that these stochastics were on the way down, and yesterday I showed you a little curve that was happening, and I was saying it's possible that we start curving up. It's starting to look bullish, and look, we got a full curve up. So this could be another green month. I'm happy that so far it does look green, even though it's only the first day, but these are some bullish things that I'm thinking about. And yesterday I had drawn this in an ascending triangle, and if we could stay up here and not drop down, then we break out, that's going to be very good. Now something else that I'm not liking is that it does kind of look a little bit like bearish divergence. If you see from this RSI point to this point, we're slanting down, and we see the points here in the candle from here to here, we're kind of slanting up. So that kind of starts looking like a little bit bearish divergence. This indicator of the RSI still hasn't picked it up. As you can see, it picked it up here. From this point to this point, it's flat. From this point to this point, it's pointing up. Same thing here, from this point to this point, pointing kind of up. From here to here is pointing down. So those are bearish divergence. Let's see if this one gets picked up in the future. Now let's head over to the 2-week chart. This one doesn't close until next week, but the stochastics are pointing up, so that's bullish as well. Now on the weekly candle, this is the one that closes today at 8 p.m. Eastern Time. Here the stochastics just got here, so they're starting to get toppy. They could still stay here and drag, so this is not concerning me too much. Obviously we could just roll over here. This RSI kind of concerns me because we are already rolling over on the RSI, even though we could always curve back up just like how we did right here. Now we are far away from the 21-day moving average, which is currently now at 93,866. So I'm not liking that, and right now we have a red engulfing candle, so we never know. From here to there, maybe we pump and it doesn't close as red. I'm hoping for a more skinnier, indecisive red candle, so that even though we get a red candle, it's almost like a cheating red candle. I expected a red candle soon because we did have 6-7 bullish weeks of just all green candles, so the probabilities get lower and lower once you get into the 8th, the 9th, and the 10th. But like I said, we could close an indecisive red. That would be awesome. If not, I'll take this as a red candle, and then the next one could be green. I would love that as well. Now remember, I have this in a falling wedge, guys, and this should be breaking us out to about 117. Currently the top was about 112. I still have hopes that we will reach that full measured move though. Now let's head over to the other days, and as you can see here, the 3-day, the stochastics are pointing down. We're far away from the 21-day moving average. On the 2-day, the stochastics are pointing down, but they're starting to look like they're kind of curving here a little bit, so that's a possibility. I'm liking that we're close to the 21-day moving average, which is at 101,722, and so far we have a green candle. This does close in also about 2 hours and 36 minutes, so if we could get this all the way to the top here, green engulfing candle, that would be super bullish. On the daily chart here, stochastics are low. They could be here for a little bit, but you know, they look to start coming up. Yesterday we did close a green candle, so that was good, but we are below the 21-day moving average. That's bearish. This candle looks to close green. Hopefully we could pump to the 21-day moving average, which is at 106,215, and even close above it. We could close above that 21-day moving average, I will get even more bullish. If we close below, I have to be a little bit concerned, a little bit weary, because then the next stop is going to be the 50-day moving average, and that's currently at 98,571. Now, if I put on the patterns, I also have the daily on a falling wedge, and you got to admit, this is tracing it perfectly. If we zoom in, even yesterday's candle close was right on top of the pattern, and now this green one is all the way back in the pattern. So it'd be cool if we could come all the way here to the top. If not, I expect us to continue filling out this flag until this red line, the 50-day moving average, could catch up to price, and then I see us going back up from here. Now I have this measured move here to about 116,000. I'm going to move it because now there's too many candles past the measured move. I'm gonna move it somewhere around here for now. Hopefully we get a breakout, if not I have to adjust. And now currently the new measured move is going to be about $114,000. so that pretty much means that we would be breaking the last all-time high. So I'm looking for some type of scenario like this to happen. Now if we head over to the 22-hour chart, we're seeing that the stochastics are low. They're starting to round back up. We are having a green candle here as well, but we are far away from the 21-day moving average, which is at 107,541. But with low stochastics, it looks like if we could break above the 50-day moving average, we could probably get to that 21-day moving average. Just check all the stochastics on these time frames. 12-hour, the stochastics are low. That's bullish for me. On the 10-hour, the stochastics are low, coming up. On the 8-hour as well. So it does look, we are far away from the 21-day moving averages, but it looks like we could be making a run for it. On the 6-hour, stochastics pointing up. And on the 4-hour, okay, we're toppy, but look at this. We are also getting a bullish divergence, it looks here, on the stochastic RSI. So that's a good indicator. This kind of looks like an inverted head and shoulders that could break us out. So we are above also the 21-day moving average and above the 200-day moving average again. So we're starting to get bullish. Remember, this was the last line of defense. If we would have broken up under the 200-day moving average, that would have gotten very bearish. But so far, we're above the 200. We're getting back above the 21, and this kind of gives me inverted head and shoulder vibes. So this is pretty good. I'm starting to see that we could make some type of a run to about 107,000. This is the 50-day moving average. It looks like that's where it might be going. We head over to the 1-hour chart. Stochastics are toppy. Maybe they could come back up. We are above the 21-day moving average, so we did reclaim that. This also looks like we're in a flag, so we need to get above the 200-day moving average in order to get bullish, and that's currently at 107,114. So that's also telling me that. Now if this is a flag, I'm not going to draw the full pattern, but just the measured move here, and let's say we drew the flag and we put it here. See, that kind of takes us close to the 200-day moving average, and this would be somewhere around 106,600. So that's a possibility with that flag there if we could curve back up. Let's take a look at the 15-minute. The stochastics here do look like they want to dip over though, and this is some type of a strange pattern. This kind of looks like a double top here. So the double top would be from here. So let's see what the measured move of that would be from the top all the way to the center line. And I mean, that will probably break us below the pattern here. Yeah, that will break us below the pattern. That will actually bring us all the way down to about 103,423. Now that's one scenario, but I'm also thinking, what if this is actually an inverted head and shoulders? It looks kind of weird, but if we did it the other way, because this is like a weird pattern, they usually, it looks a little bit more cleaner. This is, we're trying to interpret what this is. If this is an inverted head and shoulders going up, then this measure move takes us to about 106,104. So both scenarios are possible. We will have to see how these candle closes on the 15-minute. And another thing that's bullish is that we are above the 200-day moving average and above the 21-day moving average. And this is very important that we reclaimed it on the 15-minute time frame. Since we reclaimed it here, now we could start making more moves coming above the 200-day moving average on the 30-minute, then over here to the 45-minute, then eventually the 1 hour, and then slowly but surely everything else starts to get bullish. All right, so overall, I'm thinking that Bitcoin is probably going to make a move towards 107,000. Let's see what happens after that. Very important to see the daily candle close and the weekly candle close today, and it's very important for us to get on this daily chart above the 21-day moving average, which is currently at 106,216. If we could close above this, it's going to get bullish. If we close under this, it's not bearish yet, but we are beneath the 21-day moving average. the next couple of days this week, we have to try to be able to redeem ourselves and get above that 21-day moving average. So right now I'm seeing us go to 107. If we drop, same thing, ranging between 103,000 to 110. We break 103,000, we might go to 100. We break 100, then I'm seeing about 98,000 or lower. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, and subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.